this video, I'm reviewing 22 financial steps to take before the end of the year. Hey everybody, it's Matthew Jackson here from 401k Maneuver, where we provide online professional account management to help employees just like you grow and protect their 401k account with the goals of improving your account performance, managing your downside risk, and reducing fees that naturally harm your account performance. If you're new here, be sure to hit the subscribe button for the channel, and the links to everything that we mentioned in this video below you can find in the description box below. So let's jump right in. Fourth quarter's here, which means there are important financial steps to take before the end of the year. Taking the time now to work through this checklist may help end the year strong and start 2020 with a bang. So grab a piece of paper and a pencil, be sure to take some notes. So keep watching for 22 financial steps to take before the end of the year. First, review year-to-date progress. It's important to review your 2020 financial goals and assess your progress. Make sure you take note of what you still need to accomplish by the end of the year, and don't beat yourself up if you're off target. It wasn't an easy year, and many of us are having a difficult time adjusting. So do what you can to adjust your budget and meet those goals. Second, review your current cash flow. Fourth quarter is the perfect time to sit down and analyze your spending habits. If you're spending more than you're saving, see what you can cut and apply it toward your retirement savings or your emergency savings fund. Third, assess your debt. A smart financial step to take before the end of the year is to review your debt level and ensure you're on track to meet your debt payoff goals for the year. So see where you can cut back on ancillary expenses and instead put that money toward paying off more debt before the end of the year. And while you're at it, go ahead and create your debt elimination goals for 2021. Fourth, fund an emergency savings account. If there's anything this year has taught us, it's the importance of having an emergency fund to cover unexpected expenses. If you have one already, are you on track to meet your savings goals? If not, see what expenses you can cut to put more money into your rainy day fund. And if you don't currently have one, make a plan to set aside some money before the end of the year. Even a few $100s can be a big difference if your car breaks down or the dog gets sick. Fifth, pay down federal student loans. On August 8th of 2020, President Trump signed an executive order to continue to suspend loan payments, stop collections, and waive interest on ED-held student loans until December 31st of 2020. Now, with interest rates on federal loans at 0%, see how much you can pay down on the principal before the end of the year. Sixth, review your credit reports. According to the Insurance Information Institute, in 2020 through April 10th, the ITRC tracked 269 breaches that exposed 3.3 million records. With data breaches happening more often, there's no better time to review your credit report and confirm that the actual information is accurate. It's a good practice to regularly check your credit reports, credit card statements, and bank accounts. In addition to monitoring your statements regularly, it may be wise to invest in an identity theft monitoring service. Make sure you check the description box below and read Data Breaches: 6 Things Consumers Can Do to Protect Privacy and Online Data. Seventh, plan and budget for 2021. Fourth quarter is the perfect time to review your 2020 budget and evaluate what you can do better. Then, create an improved budget for 2021. Be sure to budget your 401k and IRA account contributions, and if possible, budget the maximum deposit amounts. Also, if you know you'll be making a big purchase in 2021, such as a house or a car, plan for it now. Take the steps to improve your credit score and save for the down payment right now. Eighth, review your retirement plan or get one in place. This financial step to take before the end of the year is critical to your future. There's no better time than now to sit down and review your retirement plan or get one in place. So make sure when you're doing this, ask yourself, at what age do you want to retire realistically? What do you want your retirement to actually look like? Think about it. How much money will you need? Not just to scrape by, but have a fulfilling, comfortable retirement that you've always dreamed about. From there, take a look at how much you've already saved and figure out what you need to do to get back on track. Or if you don't already have a plan, figure out how much you need to save each month to meet your retirement goals. We at 401k Maneuver can't emphasize how important this first step is, because if you show up and work the plan, you may find that a lot of anxiety and stress you have over your retirement savings, they actually might go away. You are more likely to feel in control and on the way to achieving your goals when you do this. So check out our retirement calculator to see how much you may need at retirement and calculate how professional help may improve your future retirement income. Ninth, max out your 401k or IRA contributions. This financial step to take before the end of the year is critical because it may affect your future retirement income and help you take advantage of tax deductions. The 2020 contribution limit for 401k, 403b, most 457 plans, and the federal government's thrift savings plan is $19,500. If you're 50 and over, your contribution limit is $26,000. For individual retirement accounts, the limit for 2020 is $6,000. If you're 50 and over, your limit is $7,000. Assess where you are and see if you can contribute just a little bit more out of each paycheck now throughout the end of the year. If you can't max out the contribution limit for your 401k, at least contribute your employer's match contribution because it's like getting free money. Also, if you receive a pay raise this year, increase the contribution towards your retirement savings. Also, if you received a pay raise this year, increase the contribution toward your retirement savings. If you're still watching, make sure that you subscribe to this channel, hit the like button for the video, and share it with the people that you love, trust, and respect. Be sure to hit the little bell on the bottom right here to make sure you receive a notification for the next valuable content that we upload to our channel. Let's switch gears here to move to number 10. Read your investment statements. Opening and reviewing your statements helps you determine whether or not you're on track to meet your financial goals. Listen, you guys, too often when 401k or IRA statements come in the mail each month, people just toss them in the trash. Others try to read them, but they really don't even understand what they're reading. It's important that you understand what's happening with your hard-earned money. So open your statements and read them. If you don't understand what you're receiving, then reach out to an expert for help. Doing so may have a big impact on your overall returns and confidence about achieving your retirement goals in the future. Number 11, rebalance your 401k. An important financial step to take before the end of the year is to rebalance your 401k. If you aren't rebalancing your account allocations, you may be missing out on earning more and keeping more of your hard-earned retirement savings because unmanaged account allocations may experience much larger losses in down markets and may miss the opportunity for growth during good markets. We recommend rebalancing your account allocations every quarter or 4 times per year. This way, you can make the appropriate changes in order to stay on course with your savings goals. If you'd like more tips on how to have more income at retirement, check out our guide in the description box below, How to Supercharge Your 401k Performance Today. Number 12. Roll over old 401ks. If you have an old 401k from past employers just sitting, plan to consolidate or roll it over before the end of the year. Moving an old 401k may help reduce fees and create more investment flexibility with more choices that are offered outside of a 401k. We recommend you speak with a third-party expert before deciding whether you roll over an old 401k into your new employer's plan or into an IRA for yourself. But first, check out our guide on the 5 irreversible and costly rollover mistakes that's listed in the description box below. 13, cash in on investment losses. If you hold losing positions in the market, consider selling them to offset stock market gains. The IRS allows you to claim up to $3,000 in capital losses per year or $1,500 for a married individual filing separately. If you exceed this, you may carry over unused losses into future years. 14. Plan for year-end profit sharing. If your company offers profit sharing and you know you'll be getting paid out at the end of the year, now is the time to develop a plan for what you're going to do with that money. Decide now if you're going to save it, pay off debt, or invest it into your retirement savings. Number 15, check your flexible savings account. Many FSAs must be used by the end of the year. So, do you have unspent money you need to use, or are you going to lose it? If so, go ahead and make those doctor's appointments you've been putting off. Whether it's getting your vision checked up, buying new glasses, or going to the doctor for a checkup, use your pre-tax dollars you put in your FSA account to get this done before you lose the money by the end of the year. Number 16, prepare for healthcare open enrollment. The 2021 open enrollment period runs from Saturday, November 1st, to Tuesday, December 15th of 2020, and coverage starts January 1st of 2020. Be prepared with updated list of doctors and prescriptions before enrollment begins so you aren't scrambling during the holiday season to gather key information needed to enroll. Number 17, review insurance policies. Fourth quarter is a great time to evaluate whether your home and auto insurance coverage still makes sense for your needs and if you can lower your rates to save money. If your home has increased in value due to updates or additions, make sure to change the replacement value to reflect the new value increases. For auto insurance, if you have any prior tickets or accidents that may have fallen off this year, be proactive and get a new quote to see if you can actually save some money. Number 18, review life insurance policies. Have you stopped smoking or lost weight in 2020? If so, review your life insurance policies and see if these life changes may help you get a better quote to save some money. Also, look for gaps in your policies. If you recently got married or had a baby, it's important to make sure the payout amount covers your spouse or child should something happen to you. Number 19, update your beneficiaries. When was the last time you reviewed your accounts and made sure your beneficiary information was accurate? If it's been a while, right now is the time to make the necessary updates. This means checking the beneficiaries for your life insurance policies, investment accounts, 401ks, IRAs, checking and savings accounts, just to name a few. Number 20, review estimated taxes. If you're self-employed, have you made all your quarterly tax payments this year? Will you purchase equipment or other investments by the end of the year that can offset profits for 2020? We recommend you talk with your accountant to make sure you're on track with estimated taxes for 2020 and ensure you won't get stuck with large tax bill come the spring. Number 21, review and update tax exemptions. This fourth quarter financial tip can make a big difference come tax time next year. So take the time now to review your tax exemptions to see if you're paying too much in taxes or not enough. If you're not paying enough, making the change now may prevent you from owing the IRS for underpayment. If you're underpaying, you'll be able to keep more each paycheck or apply the additional amount to your 401k or IRA contributions. If you've received bonuses or large sums of money towards the end of the year, taking a look at your exemptions now may also help keep you from owing the IRS come tax time. And number 22, seek third-party help. This financial step to take before the end of the year may have a big impact on your overall finances, tax situation, and retirement future. It doesn't matter how far away or how close you are or how much money that you've saved. Speaking to an advisor now can help you get on track and stay on track with your financial goals. Think about it this way. Even the best athletes in the world have coaches. Find a coach to help you be successful with your money. A May 2014 study conducted over a 6-year period compared those who had help with managing their 401k and those who did not. Here's what the study revealed. On average, the median annual returns for folks in the study who got help had more than 3% more on average higher returns than the people who didn't get any help at all. So let me ask you a question. How would 3% multiplied over years make a difference in your life? If you have questions or concerns about your 401k performance, click below to book a complimentary 15-minute call with one of our advisors today.